U.S. politics have, of course, been driving dramatic market moves, with the market expecting a pro-growth Trump administration. However, changes in the macro and market backdrop could mean a different situation unfolding for President-elect Trump's second term than in his first. Here to discuss, Dirk Willer, Citi head of a global macro strategy, along with Jens Nordvig, founder and CEO of Exante Data and Market Reader. Guys, thank you so much for being here. I want to talk about first the Trump economic team, which now seems to be pretty much set, with Kevin Hassett announced as head of the National Economic Council. We know, of course, Scott Bessent is going to be Treasury Secretary. Jens, I want to start with you because you put out a note this week where you talked a little bit about Scott Bessent. You know him personally, and you have for a long time. What does it tell you that Trump's picks for some of these economic positions have seemed to be more, for lack of a better word, conventional or safe, or whatever you want to call it, compared to perhaps some of his other cabinet picks?
Yeah, I think it's very important. So I've known Scott Bessent for a long time. He actually was my very first client when I launched Exante Data back in 2016. So we've had many discussions about the global economy over the years. And the reason why it's important is that we have an incredible amount of uncertainty about the policy outlook. What's going to happen to fiscal policy? What's going to happen to trade policy? And obviously, Scott Bessent is not going to be the president, but I think he's going to be an important voice within the administration. And I think he's going to work very, very hard to reduce tail risk for the economy and for markets. And you can see it already this week. As soon as we had the appointment, the bond market started to rally. Essentially, kind of the risk premium that had started to sneak into yields started to get priced out. So we got a very clear and quick indication from the market that this is something that people view as a stabilizing factor, and I strongly agree with that.
Dirk, I want to bring you into this in a minute, but Jens, first of all, follow to you. How exactly does he manage that tail risk? I mean, the purview of the Treasury Secretary, even though it's big, it's still limited. And as we know, in the past, there have been times when, in the first term, Trump sort of, outvoted, so to speak, some of his cabinet members. So how do you think he manages that tail risk?
Yeah, so I think if you look at it legally, okay, what's the specific role of the U.S. Treasury Secretary? It's one thing, right? But clearly, Trump is going to appoint people that he listens to. So you're going to have a dual role. You're going to have your formal role in the Treasury Department, right? And you're going to be an advisor to Trump. And I think you can already see it in some of Trump's rhetoric when he talks about the corporate tax rate. He said, we're going to try to lower the corporate tax rate. And then he says, we probably can't get it lower than 20%. That's a person talking that is aware of very, very challenging budget math, right? When Trump came in 2016, the budget deficit was around 3%, and he expanded it to 4.5% within 3 years before the COVID shock, right? This time around, the deficit is more than 6%, and expanding it further is going to be very hard for the market to handle. And I think the administration is aware of that, and I think Scott is going to push that view that there needs to be a degree of fiscal discipline in place here.
Dirk, I want to bring you in here as well, because I'm very curious about your thoughts, Dirk, on that same question. As you look and Trump rounds out, this economic team, Bessent, Lutnick, Kevin Hassett, longtime Trump advisor, well-known in conservative economic circles. Dirk, what did you make of those picks, those nominees, and what they tell you?
Yeah, I agree that it's a great team. I mean, I know Kevin fairly well, and I must say great appointments across the board in the key economic positions, really. And you can see the market indeed priced out a lot of fiscal risk. We call it the Bessent unwind, if you like. So now, both rates, but also the slope of the curve and price and inflation at the back end of the curve is lower than where it was before the election. So that's clearly the market giving up on the view that there could be extremely expansionary fiscal policies in the short term that would cause havoc with the curve and with inflation expectations. I would also say, though, something that we call the Trump supremacy, in a sense that it's really, he listens to a lot of opinions, but in the end, he is the decision maker. He wants to be the decision maker. And so I would say even a strong economic team is not a guarantee yet that the policies will not be more expansionary than the market is hoping here. But certainly so far, the market is giving the team the benefit of the doubt.